Hello everyone. Now I'm going to discuss measuring economic activity. So, gross domestic product or G- GDP is the name we give to total market value of the final goods and services produced within a nation during a given year. It is the figure you get when you apply the measuring rod of money to the diverse goods and services. From apples to zithers that a country produces with its land, labor, and capital resources. GDP equals the total production of consumption and investment goods, government purchase, and net export to other lands. So, two measures of national product, goods flow, and earnings flow. So, mo ni siya ang diagram. So, flow of product approach. Each year, the public consumes a wide variety of final goods and services. Goods such as Apple, computer, software, and blue jeans. Services such as healthcare and haircuts. We include only final goods ultimately bought and used by consumers. So earning or cost approach. The second and equivalent way to calculate GDP is the earning of cost approach. Equivalence of the two approaches. Now we have calculated GDP by upper loop flow of product approach and by the lower loop earning flows approach. So from business accounts, so accounts for firm is national and numerical records of all flows, so output, cost, and etc. During a given period, we can show the relationship between business account and national accounts by contracting and the economy made. So the problem of double counting. So final product is a one of that is produced and sold for consumption of investment. GDP includes intermediate goods that are used up to produce other goods. GDP therefore includes bread but not wheat, and home computers but not computer chips. So value added is the difference between a firm sales and its purchase of material and services from other firms. Investment and capital formation. Investment consists of the addition of the nation capital stocks of building equipment, software, and inventories during a year. The national accounts include mainly tangible capital, such as buildings and computers, but omit most is tangible capital such as research and development or educational expenses. Capital formation is defined as the part of country current output and imports which is not consumed or exported during the accounting period, but is set aside as an addition to its stock for capital goods. Total capital formation can be broadly classified into gross fixed capital formation. Exclusion of transfer payments. So, transfer payments are government payments to individuals that are not made in exchange for goods or services supplied. Example of government transfers include unemployment insurance, veterans benefits, and old age or disability payments. These are the payments meet important social purposes, but since they are not purchase of current goods or services, they are omitted from GDP. Net domestic products or NDP equals the total final output produced within a nation during a year, where output includes net investment or gross investment less than depreciation. NDP equal GDP is equal depreciation. Gross National Product, GNP, or GNP is the total final output produced with inputs owned by residents of a country during a year. So the Consumer Price Index, the most widely used measure by inflation, is the Consumer Price Index, also known as CPI, calculated by the Bureau of Labor Statistics, or BLS. The CPI measures the cost of buying a standard basket of goods at different times. The market basket includes the prices of goods, clothing, shelter, fuel, transportation, medical care, college tuition, and other goods and services purchased for day-to-day living. So that's all. Thank you for watching.